Hello and welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. Well, what the globe taketh away, the globe giveth back. In morning trades, the markets were down in the dumps, as it were, almost 1% lower after the Chinese data indicated that manufacturing activity in September was actually worse than August, what you call the PMI numbers, the Purchasing Managers Index. But towards afternoon, as Europe started to pull itself up by the bootstraps and commodity stocks and European indices in general rose by about 0.5%. The Indian stock indices also took a U-turn, and we actually end the day with 2/3 of a percentage point in terms of gains for the Sensex and the Nifty, and the Bank Nifty led from the front with 1.3% gains. So all in all, it turned out to be a good day for the bulls. Hi, sir.
Hi, Lata. Small mercies for the bulls, but I guess they're welcome nevertheless. On that note, let's get to the headlines. Bulls make a comeback on Dalal Street thanks to slightly more stable global cues. The Nifty ends 0.4% higher, but just below the 7850 mark. The Sensex gains 170 points. Banking, oil and gas and real estate stocks see strong buying action.
Mid-caps rise in line with blue chips, with the index gaining 0.6%. Dishman Pharma soars 17% on getting a license to manufacture a TB drug. Visa Steel hits a 20% upper circuit as lenders invoke the strategic debt restructuring rules to convert the company's debt into equity. And Andrew Yule and Tidewater also gain after one of Tidewater's existing minority shareholders makes an open offer to acquire more shares in the company.
An unusual management change at Fortis Healthcare. Shrivinder Mohan Singh decides to step down from the post of Executive Vice Chairman to pursue personal spiritual goals. He will be redesignated as a non-executive Vice Chairman from the 1st of January 2016.
Well, that's an unusual act of moving away from business into spirituality. We'll, of course, get you more of that. Those were some of the headlines, and here are the experts who are lined up to speak to you today. Ruchir Sharma of Morgan Stanley will tell us why he thinks the global economy is on the brink of a recession, just a shade away from recession. Nandan Chakraborty of Axis Capital joins in with his take on the markets and some sectoral advice for stock picking. We will also get you the managements of companies like IDBI Bank, which saw their stocks moving smartly today.
All right, so that opinion coming your way in just a bit. But first, the action. After a major sell-off yesterday, markets once again opened with steep losses this morning. It was all looking downhill at one point in time, but then a dramatic rally came in late trade, lifting the gloom. Anuj is here with the wrap of the day's trading action. Anuj, India managing to buck at least the Asian market trend?
Yeah, I mean, the start was pretty bad. It looked like the market was breaking down and the Nifty would even go below 7,700. And then finally, the market had a sharp recovery, and at one point towards closing, the Nifty was testing 7,900. But then this is expiry week. You should be expecting these kind of moves ahead of expiry, and a day ahead of expiry. Really, that was a bizarre move that you saw. The recovery was led by banks, as you would expect, the largest sector contributing clearly. ITC, Infosys and some commodity stocks also supported. So let's talk about some of the stocks that led the market recovery. As I said, it was about private sector banks where we saw the highest amount of recovery. So stocks like IndusInd Bank, HDFC Bank, ICICI Bank, Kotak, Yes Bank, all of them were higher in trade. Apart from that, the support for the market came from 2 or 3 heavyweights. ITC in particular was strong through the day. That stock was up about 1.5%, Infosys nearly 1%, and Lupin was up about 3%. Commodity stocks, some of them gained today. Stocks like Cairn, that was up about 4.5%, was the top Nifty gainer actually. Vedanta was up 3%, and Coal India saw some short covering after the big decline of last few days. In terms of Nifty losers, NMDC was the top loser today, down about 4%. Tata Motors has now halved, exactly halved from its 52-week highs. That stock was down 2%. And Bosch, that stock was down about close to 3%. In terms of mid-cap, stock of the day today was Dishman Pharma. That stock was up about 16%. It's already seen fair bit of re-rating, but that continues. And actually, even IDBI Bank can claim to be one of the stocks of the day. That was also up 9%, and Indiabulls Housing Finance was up 4.5%. Some more names then: JP Associates, Mercator, Trident, all of these stocks up between 10 to 12%. So all in all, a good day. Tomorrow's expiry. and that's going to be a big day. The market has shown enough volatility over yesterday and today, and the sense you get is that that's going to continue on the expiry day.
Thanks a lot for that, Anuj. You have a long day ahead tomorrow, and one should see it's been a very, very rocky series, and you should see a lot of activity. But aside from all these volatility and looking through them, a couple of points stand out. One, we have been relative outperformers in the manner in which the global markets have swung before and after the FOMC decision, the US Fed decision, which gave the impression that people out there are still worried about the weakness of the global growth. The second factor that comes out is that perhaps there is an exhaustion of selling even in global markets. We saw what is arguably a bad data from China today in terms of manufacturing numbers. The numbers were lower than what the polls indicated, and they were lower than the August numbers in terms of manufacturing activity. In spite of it, Europe pulled itself up, and so did a lot of commodities, indicating that they'd already sold out on the news. So there could be some near-term correction upward in most of the risk commodities, most of the risk asset classes, which could only be beneficial for us. And therefore, who would benefit from this is what we have to look at. And certain stocks genuinely stand out. Through all the gyrations, you saw some stocks doing extremely well for themselves. IDBI Bank, it could be in for some game-changing if the management is genuinely recast. At the moment, you're taking an early bet. It's a high-risk, high-reward bet, but perhaps a good bet to take. And then you saw very good gains coming in for HPCL. I think much of that will be maintained. And then come the Maruti Suzukis, the Lupins, the Infosys, the M&Ms. Those were the stocks that held their own in spite of the gyrations. So maybe these are the stocks that one must watch out for if one gets a reasonably secure upturn in the coming days. And in the mid-cap space, of course, there are lots of stocks which kind of braved their way. Dishman Pharma was already mentioned, but stocks like Marksans Pharma, Torrent Power, a bunch of the public sector banks, notably UCO Bank, and UCO Bank in particular, though not the only one, a bunch of PSU banks are doing well because they've all got exposure to power distribution companies, and there seems to be some serious intent on the part of the government to try and rectify that piece to the extent possible. That will be positive for the banks which are exposed to these distribution companies as well as to power generating companies. So I would think that from the rubble, if you see the markets rise beyond 8,000, these could be pockets one should watch out for.
Okay, well, that's today's action. On that note, let's also get you some opinion. Nandan Chakravarti of Axis Capital says that global headwinds are the biggest driver for the market at the moment. He also has some investment ideas for traders.
If the Fed hike rates, it's symptomatic of the world doing well. Which brings me to the basic point, which is India does not do well unless the world does well. This is a basic misconception in the markets. When the world does not do well, obviously commodities and interest rates and all that is in our favor. But what happens is basically while our margins go up, our volume goes down, our capital flows come down, and more important than all that, our corporate confidence and our government confidence and our RBI confidence in doing things come down. As far as the long-term investor is concerned, who's a retail investor, he should definitely do SIP. There's no question of him putting lump sum at now. This is not necessarily the bottom of the markets. Neither is it a case where the market is going to run away immediately. So SIP would be fantastic for now. First is banking. Second is OMCs, oil marketing companies. So there are two things. One is I don't expect with the things that is going around in the globe for the oil to again go back to 70. So yes, maybe 50, maybe 60, I don't know. But at these levels, I think it still remains a great buy.
Those were some of the picks from Nandan Chakravarti. You can get the rest, of course, on Money Control, where the entire interview is. Now let's talk about the big global Q that moved markets early morning today. The Dragon definitely seems to have lost its firepower. The latest preliminary market Caxton Purchasing Managers Index for September has come in at a 6-year low of 47 versus expectations of 47.5. Almost all the categories, including employment, new orders and output, came in below the reading in August, while a deflationary trend continues at both input and factory gates. While experts believe that the latest trend could be a reflection of the fact that the world's second largest economy is looking to make a transition from an export-based manufacturing hub to a more domestic-oriented consuming economy, the government's additional spending will only yield results in the long run.
And of course, we had that data pressuring, in fact, the entire region, those weak PMI numbers coming in from China, dragging down Asian markets. The Shanghai Composite and the Hang Seng in Hong Kong lost over 2%, while the South Korean Kospi ended about 1.8% lower. The Japanese Nikkei, of course, was closed today as well on account of a public holiday.
Okay, more opinion. Morgan Stanley's Ruchir Sharma believes the global economy is perilously close to a recession. Speaking to CNBC, Sharma warned that the slowdown in China will have drastic consequences for the global economy.
China has been the largest contributor to global growth this decade. And if you look at the trends in Asia, Asia is already in a trade recession. Export growth in virtually every Asian country is collapsing, and the manufacturing growth, as we know, that the big story of the last couple of decades has been that China has become the hub of global manufacturing, and global manufacturing growth, if you look at it today, has virtually come to a standstill. Now, these are typical indicators that you get of a global economy that's very weak and is teetering on the brink of a recession. So I think that we already have some signposts here that the global economy is pretty much close to a recession. And in that article that I wrote, I think we are one shock away from the global economy entering its sixth global recession in post-war history.
All right, those are some ominous words and a warning coming in. But on that note, let's move to some stock-specific action. Now, it was another volatile day of trade for Motherson Sumi. The stock recovered from yesterday's lows and witnessed some buying interest after the management allayed concerns that Volkswagen fiasco would not impact earnings. We've got Sonia joining in with more details. Sonia, lots of brokerage notes are now coming on the road ahead for Motherson. What do they say?
Thanks for that. Well, after a two-day brutal sell-off, there was some recovery that we saw in Motherson Sumi today. However, the stock is still down 40% from the highs of 396 that it hit earlier in the year, and it did hit a fresh 52-week low in trade today. Now, some analysts believe that a lot of the negatives have already been priced into the stock. Antique has reduced its target price to 294 versus 402 earlier, but they did mention in their note that you should use this panic reaction as an opportunity to add into Motherson Sumi. They also said that the maximum impact of the revenues due to the Volkswagen scam could be as less as just about 8-odd%, and the revenues will also be impacted only and only if the diesel models in the other affected countries stop getting sold. As of now, they only stopped getting sold in the US, and Motherson does not have an exposure there. So as of now, there's nothing to be concerned about. However, Antique has still cut the consolidated earnings estimates. The revenue estimates have been cut by 10%. They say that it's better to remain conservative amidst the lack of proper visibility.
Okay, thanks, Sonia. But just hang in there. This Volkswagen problem is also weighing on Bosch, isn't it? Could the negative outlook on diesel as a fuel option for the future hurt Bosch significantly?
Well, Bosch was another stock that was under pressure today. Post the Volkswagen scam, there are concerns emanating regarding using diesel as a fuel itself. Now, there could be stricter regulations from various government on diesel cars, and this could perhaps drive customers away from diesel to cleaner fuel options like electric vehicles or even petrol. Now, this could impact Bosch's earnings as it is a dominant supplier of diesel fuel injection systems in India and across the world. But for now, this is only a fear, and there's no conclusive damage to its earnings just yet.
All right, thanks Sonia so much for that. So Bosch under pressure, but some respite for Motherson today. Let's move on. IDBI Bank was the other stock that rallied quite smartly in trade. This after the IDBI Bank management welcomed the government's intention to try and restructure the operational structure of some nationalized banks, including its own. The finance minister, in an interview to CNBC, had said that the government is looking to rework the functioning of some banks on the lines of Axis Bank so as to grant more autonomy to the individual bank managements. Speaking to CNBC TV 18, the MD and CEO of IDBI Bank, Kishore Kharat, says the fact that the bank does not come under the Bank Nationalization Act makes it the ideal candidate for such a restructuring.
Government has been speaking, particularly after the Gyan Sangam, that they want to reduce the holding in all nationalized banks, and particularly my bank is something different because we have been established under the Companies Act. So that might be the reason for the FM to pick up, or rather give an example of IDBI Bank, because since we are under the Companies Act and we are not under the Bank Nationalization Act, the government can rather reduce holding less than 51% if that is intended. It is easier to implement in our bank. So perhaps he has quoted the example of IDBI Bank, but if they are thinking on that one, I think that should be a good move.
Oh, absolutely. IDBI has been one of those roaring stocks over the past week, ever since the finance minister spoke to our managing editor, Shireen Bhan. Well, Jindal Stainless was another stock that saw a lot of gyrations to it. The management told CNBC TV 18 that its demerged entity, Jindal Steel Hisar, will be listed in the next 45 days. The promoter family will infuse 675 crore in the two unlisted entities. However, the promoter was also wary, management was also wary of Chinese imports. Here's what they told us earlier today.
Current debt of the company is about 8,500 crores, and by virtue of this scheme of arrangement and the split into 4 companies, JSL will pay off 5,500 crores of debt to its existing lenders. Split of the debt, it is going to be 2,600 crores to Jindal Stainless Hisar Limited, 2,400 crores to Jindal United Steel Limited, and about 500 crores to Jindal Coke Limited.
Okay, that was JSL in news. That's moving on to another stock that clearly shown in trade today. That was Richmond Pharmaceuticals, gaining as much as 16%. This after the company got a go-ahead to produce active pharmaceutical ingredient of a tuberculosis drug for Johnson & Johnson company owned Janssen Pharma. Richmond will be an exclusive supplier for the API for Janssen Pharma produced drug Sirturo, which is used to treat tuberculosis. Talking to CNBC TV 18, Richmond Pharma CEO Arpit Vyas said that he expects a 10 to 12% rise in the top line growth and 10 to 15% increase in the bottom line.
We have done an exclusive tie-up with Johnson & Johnson or Janssen, Johnson & Johnson's pharmaceutical arm. And we have done a tie-up to supply their global need of this drug. We are giving a guidance of 10 to 12% of the top line growth. But at the same time, the bottom line growth is going to be much higher, which we are targeting about 10 to 15%.
All right, more strength to these drugs and to these drug makers. It's about time we eradicated tuberculosis, at least from India. Well, let's take a break on that note. But coming up, Sudarshan Sukari joins in for a technical chat on what will be a crucial day for the markets tomorrow. We'll also tell you about other stocks that were in the news.